A very good evening and welcome to the India Development Debate. I'm Tamanna Inamdar, and of course the big story of the day is the end of a long wait to know who will be the next boss at India's largest private sector bank, HDFC Bank. The news broke this morning that Aditya Puri's successor has been found. That's Sashidhar Jagdishan. Ahead on the show, I will be speaking with HDFC Bank's non-executive chairperson Shyamala Gopinath to know more about the new MD and CEO. Well, that's not all. Some of you may remember that yesterday we took up the issue of whether BCCI and IPL should continue its sponsorship with Vivo amidst so much of controversy and amidst India's sharp and harsh measures to contain Chinese influence on Indians' business and economy. Well, lo and behold, news has broken that Vivo is considering an exit from the deal. Now, what's the full story? What's the true story? I have the Times of India cricket editor who broke that story ahead with me on the show. We'll also discuss the impact on the whole business of BCCI. And don't miss out the India Revival Mission on India Development Debate this evening. We will be hearing from Amul boss, Mr. Sodhi. So all of that and more lined up, but let's get to the big story of the day. Now, it has been the hunt for a successor that everyone has been clued in on, at least in the business community, among investors and those who track the markets. That's because HDFC Bank is one of India's largest private banks and has been held firm for the last 2 decades and more, 24 years really, by Aditya Puri. Who his successor would be was a very crucial question at a time when the whole economy and banking system has been shaken up by the COVID-19 pandemic. Well, the person is Sashidhar Jagdishan, known as Sashi in banking circles.
Sashidhar Jagdishan will be the new Chief Executive Officer of HDFC Bank, India's largest private lender. The announcement ends weeks of suspense over who will succeed veteran banker Aditya Puri, who has headed the bank for the last 26 years and is set to retire this October. Puri has been credited with building up HDFC Bank to the towering reputation it enjoys today. The Reserve Bank of India has approved Sashidhar Jagdishan's appointment as the bank's top boss from a list of 3 potential candidates suggested by the board earlier this year. That included Kaizad Bharucha, an executive director with HDFC Bank, and Sunil Garg, the global head of City Commercial Bank, as an external candidate. Jagdishan currently serves as the additional director of HDFC Bank and has been with the bank for nearly 3 decades. Sashidhar, or Sashi as he's called in the banking circuit, joined the bank around 1996 as a manager in the finance function and then went on to become business head finance in 1999 and chief financial officer in the year 2008. He has played a critical role in supporting the growth trajectory of the bank. He led the finance function and played a pivotal role in aligning the organization in achieving the strategic objectives of the years. Prior to joining the bank, Sashi was a senior officer in the country financial control division of Deutsche Bank. He completed his graduation in science with specialization in physics. He's a chartered accountant by profession and also holds a master's degree in economics of money, banking and finance. In August 2019, HDFC Bank's board asked Jagdishan to move away from his role as chief financial officer and appointed him change agent. But the finance function of the bank continued to remain with him. At the bank's last annual general meeting, Aditya Puri himself said that the potential successor has been with the bank for 25 years and that he was always in place, at least in his mind. Jagdishan takes over at a time when the banking industry is in the middle of a crisis following the onset of COVID-19. HDFC Bank has also been at the center of controversy around the bank's vehicle financing division, flouting rules to sell GPS devices bundled with auto loans, leading to the sacking of a few banking officials. There is little doubt, though, that Sashi has big shoes to fill. With Neha Tyagi, Vikram Oza in Mumbai for ET Now.
The big suspense over who will succeed Mr. Aditya Puri as the next CEO of HDFC Bank is finally over. It will be Sashidhar Jagdishan who is the new CEO. The name was approved by the RBI. There was a list of 3 given and that approval has come in. The bank has made the official announcement, etc. But what was the entire process and what are the challenges that Mr. Jagdishan now faces? He has some big boots to fill. Speaking to us about this now is Ms. Shyamala Gopinath. She's the chairperson of HDFC Bank and also the former deputy governor of the RBI, a veteran, if I may say so, in the banking industry and was very much part of the committee which zeroed down on Mr. Jagdishan's candidature. Ms. Gopinath, welcome to ET Now and thank you so much for speaking with us today. I want to start off straight away by saying that when you were going through the entire process of narrowing down that list of candidates to succeed Mr. Aditya Puri, what were the key criteria to your own mind?
As I think we've been keeping the markets informed, we did have a search firm and we had a search committee, we had a search firm, and we did look at both internal and external candidates. And the criteria is what you would expect of a leader of a large private sector bank, and which has such a great, legacy and performance and the size, the number of people, the network, all that. So, and it also so happened, it was like in COVID times also, in a way. So there was a lot of parameters that one looked at, and yes, we did shortlist based on those.
Okay, so tell me about how Mr. Sashidhar Jagdishan fits the bill perfectly as per that criteria, and also tell us a bit about him. He's not been very open with the media so far, so there is a lot of curiosity today about who the next big boss at HDFC Bank is going to be. What can you share, ma'am?
Well, I must say that we did have, we did have a couple of people. And yes, Sashi, as one would know, and that he's been involved with the bank right from the beginning, from 1996. He's held the finance role for a long time. Then he was the chief financial officer. And more recently, like 3 years ago, he's been involved in practically, all the major areas of the bank connected with strategy, with HR, with innovation, with the operational processes, and almost all the businesses, and I guess continuing to be the chief of the finance function, has almost his eyes and ears to the ground. And in addition to having that eyes and ears to the ground, he also has a great idea about the entire functioning of the bank, including the activities. And one looks at with various factors, and it's not as if sometimes there are others are not there, but there are certain. We have to take a decision, and we did find him to be a good fit for the MD role, given his HR qualities, his leadership qualities, his soft skills, his inclusive manner of dealing with people, capability to work as a team, and very inclusive type of a person, as well as knows the business. Yes, he's may appear to be like not of course in the public media as often. I'm sure going forward he would be, but he always he was the face of the investors, and he was very active in investor relations. So that way, it's not that he's he's not had any communication.
Mr. Jagdishan has worked very closely with Mr. Puri, and almost as long, the tenures have overlapped for a large period of time. How would you compare their leadership styles?
Oh, I don't. I mean, as it is, what I'm hearing now from everybody is, and it's true that Mr. Puri's built outstanding bank and excellent bank and iconic and the brand, and it's been a bank that is very agile and very futuristic, in the sense they're always ahead of the time and visionary, all that. And Jagdishan has worked very closely in that process. So I don't want to do the comparison right away. I think we would be seeing how all this actually happens. But Mr. Puri himself has a huge, confidence in Mr. Jagdishan's capabilities, and that he's the right person. And we've seen that even in our own, when we interact with him in the bank as a board, and even later, even during the search process.
Ma'am, do you think it's an advantage that an internal candidate has been finalized at the end of it all? There was some trepidation that if there was an external candidate, there would be, this short period of sort of readjustment, etc. Do you think in this case it's an advantage because Mr. Jagdishan can hit the ground running?
Yes, I mean, there is much to say for external too. They can, one can try out external candidates too, and internal. And therefore, we had this search process so that, we are able to benchmark internal and external. And one has to, there's a lot of weightage given to continuity. And, in the case, this bank has been doing well. The strategies have worked well. There are many, different circumstances in which one decides to have an external over internal. But for a bank that is stable, doing well, and but we still looked at both because we didn't, we wanted to benchmark. Yeah.
I would want to get your view on the whole moratorium issue as well. And I'm not speaking here bank specific, because different banks are calculating that number differently and have seen it come down gradually. There still is a persistent concern, Ms. Gopinath, that we don't know the full picture of how this moratorium amount is going to pan out. Are we going to load up on NPAs? Are some of these loans likely to go bad considering the COVID impact? Do you have a view on this?
I think it's, the position is quite uncertain, because see, this is a crisis that hasn't been created by the banking sector. It is something that has come from outside, and the banks have been affected by that. So it's not that, unlike the global financial crisis, where largely banks were also responsible for what happened. In this case, the banks are themselves victims of this. And one really doesn't know how what the outcomes will be, and the uncertainty is there. But I feel very happy to hear from bankers that at least in the case of number of institutions, our borrowers themselves have been quite responsible. Not all of them have availed of the moratorium, because I think they have understood that moratorium doesn't mean lower cost, and they need to pay interest also on the time, on the moratorium that they have been given. And so each bank is navigating this problem in its own way, and I'm sure they have various strategies to deal with it. But there is uncertainty. But moratorium had to be given at that time by the Reserve Bank, because it was something that was happening so soon, and in the midst of uncertainty, one had to, and also loss of jobs and the borrowers being affected. There had to be some cushion that was given at the time.
Yes.
But now what I'm hearing is that the bankers themselves don't want the moratorium to be extended, and they would rather deal with it themselves, either through a restructuring or through some other manner.
But there are people who do want the moratorium extended, especially in certain sectors which have been badly hit, like the hospitality industry. Do you think there is a case to look at a differentiated approach to the sectors that have been worst hit by COVID-19?
Obviously, some of the sectors have been badly hit, and there would be a case for consideration of for maybe a special package, or or some other forbearance for that sector. But ultimately, like it is now being said that the banks are bearing all the burdens. So should there not be some burden sharing here? So I think both the government and the Reserve Bank are very conscious of this, and I'm sure some suitable solution would emerge. The other issue is that at this point of time, it's also difficult to clearly kind of identify, okay, this is the COVID affected sector and this is not, because of the huge disruption in the supply chain. But as the economy is restarting, and there's more confidence that we are not going to be facing these lockdowns again, things will get clearer as to which are really the COVID affected sectors and COVID affected borrowers also.
Yeah, just to take that further, ma'am, and I'm taking this beyond moratorium, because the sort of IBC process has also gone on a bit of pause mode because of COVID-19. We are still to see the full extent of the economic damage done. In fact, we're in the middle of the pandemic. What is your outlook on how bad the damage can be?
And at this point of time, at least I am not in a position to say anything today as to what the damage will be. I'm sure as the days go by and one is able to get a better hang of the numbers, and also how much will be the deterioration in GDP. Let us see what happens. Too early to estimate anything.
Yeah. Okay, just one last question. We're speaking just a couple of days before the next MPC meet. Do you have any commentary on where you see interest rates heading? Do you think there is the time and the need for another cut?
Well, RBI has injected a lot of liquidity, and interest rates have already been reduced, and banks have transmitted the lower rates too. So we can see the transmission happening, and whether the interest rates will have to go down further or not is something one has to take a call based on the data that that comes in, various data, and but so long as the rates are already low and the liquidity is plenty and the policy is dovish and accommodative, we should be able to ride through this. Yeah.
All right. Thank you so much, Shyamala Gopinath, for speaking with us today on ET Now.
Thank you. Thank you very much.